This content is brought to you by Uphold, which is a great platform that makes it easy and simple for you to buy, hold, and sell and earn crypto. You can trade from anything to anything. For example, you can trade between cryptocurrencies and precious metals. It's an amazing platform that I've been using for years. And in fact, I still use to this day because they're one, a great exchange, they're reputable, and they're one of the only exchanges that still lists XRP. Many of the other exchanges have delisted XRP due to the SEC lawsuit, but you can still get XRP on Uphold. So I've interviewed the CEO, the founder, and many other representatives from Uphold over the years, and I'm a fan of this platform. And once again, there's some great features like trading between different assets very easily. You don't have to convert to a currency and so forth. They're used by 10 plus million users. They have over 200 cryptocurrencies. And they have a very easy to use app. The interface is really nice. So I can certainly vouch for this platform. Once again, I've been a user for years. So if you'd like to learn more about Uphold, please visit the link in the description. Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Gareth Soloway, who's the chief market strategist at InTheMoneyStocks.com and VerifiedInvestingCrypto.com. Gareth, great to have you back on the show.
Oh, it's always great to be back. Thank you for having me.
Well, Gareth, I got a lot of questions for you on the markets. People are certainly anxious and waiting to hear from you. I want to start with, has your thesis changed? Have you flipped the bullish yet, or are you still bearish on the markets?
So I think overall, I'm net midterm bearish, both on crypto as well as stocks. And again, the thing is, we just have to continue to remember that inflation is at a point and it's not down below 2% yet. So the Fed, if we do slip into a recession, which is what I think is going to happen, there's no way for us to get out of that recession, right? So that means that we're not going to print our way out like we have in the past, and therefore we're going to likely see further downside.
Got it. However, there seems to be narratives forming, and I don't know if this is anything, but I think we got to discuss it. The UN calling for central banks to pause rate hikes. We saw the Bank of England do a bit of a pivot, like they're going to, start printing some money to help the markets there. What are your thoughts? Could the Fed pivot, after another rate hike, or maybe sometime next year?
Yeah, so I do think the Fed. So the key thing is going to be like, what is the pivot? So I do think the Fed is going to pivot soon, but I think it's important to understand that a pivot is just a kind of a climbing the mountain to coming down the mountainside, right? So we've had 3 rate hikes of 75 basis points in a row. So a pivot could even be early November, just 50 basis points, and then after that it's 25, and then we could go to 0. Rate hikes, but that still means the interest rate is going to be right around 4% on the Fed funds rate, right? So the idea here is that I think that at some point they will not hike anymore, but I don't see them looking to decrease those rates for at least probably a year until one of two things happens. One, it could be that we see the inflation rate get below 2% so that then they feel confident in lowering rates again, or two, things get so bad in the global economy, things get so screwed up that even with inflation above 2%, they still are like, oh my goodness, we'll tolerate 4% inflation. We need to print money anyways because things are like a depression.
Yeah, a great point. And I didn't think about it as a ramp down. You mentioned, slowly decreasing the amount of basis points that they add to the rate. And to your point, this ramp down could last into next year. But on that note, if the markets see that the Fed is turning dovish, not necessarily pausing or reversing anything, but they're like slowing it down, they're hitting the brakes, could we see a rally?
Yeah, absolutely. So I think just for instance, the last couple days until today in the stock market, I think Monday and Tuesday of this week, we saw the biggest stock market 2-day move in since 1930 or something. I mean, it was a remarkably epic move, close to 6% on the S&P 500 in just 2 days. So that was the market. Basically, we got a very poor ISM number early in the week. We got the UN saying, hey, listen, we need to calm things down in central bank lands. Don't hike as much. I mean, so there's a lot of this, and we know obviously Bank of England kind of pivoted already last week. And so I think the market was sniffing out that type of scenario. Today we we got a little bit of a stronger private sector jobs number, and that again kind of makes people think, wait a minute, maybe they won't. So there's this battle going on where you're absolutely right. If the Fed does pivot, it's going to be a relief. Everyone's going to say, thank goodness we're on the downslope now. But again, it's hard to know exactly when that will happen. I do think it could be as early as November, though.
So, and that kind of, look, I'm not a conspiracy theorist or anything, but I do understand politics and the games that are played in politics, and the midterms are coming up. So could that, dovetail with the midterms?
It definitely could. I'm kind of in the camp of a 50 basis point in November, which I think the market is looking for. The market's looking for anything different than 75 at this point.
Yeah.
So I do think that's the case. I don't necessarily think it will revolve around politics as much as just the fact that, the Fed has done 375 basis points in a row. Unless they're trying to push us into depression, they need to start toning it down a little bit and then wait a few months to see how's the economy doing. Because, again, we all know that interest rate hikes, historically, it takes about 3 to 6 months to filter into the economy. So you could argue that we've just started to see that first 75 basis point in the economy, but we haven't seen the other 275 basis points yet. And I think the Fed could be looked at as being very reckless here and almost reactionary in an emotional way, versus maybe being more measured and saying, let's wait and see how things come out in a few months. And then if we have to hike 75 again in 3 or 6 months, we do it, but don't overdo it and push us into a depression.
That's a great point. Folks often forget that there's a lagging effect, right? Even if just because they raise it now, you won't see the effect till maybe months later.
Yeah, absolutely. And and what's crazy is we're already obviously seeing it in the housing market. And so, yes, the jobs number, like the private sector number, wasn't too weak today. It was kind of right in line, but we're going to get the Friday non-farm payrolls, obviously, and we'll see how that turns out. But you have to say that, like, the housing market, you could arguably saying, is kind of crashing right now with 30 years, I think around 7%. To talk about comparisons on the ability for people to afford houses 6 or 12 months ago versus now, it is insanely different versus that mortgage payment on a 30-year.
Absolutely. Yeah. Houses I'm seeing are coming off the market, and things have just slowed down big time there. So let's talk about Bitcoin. What is your short-term outlook, and as well as maybe long-term going into next year?
Yeah, so short term, I continue to be on the focus of thinking that it is more on the near term bullish side. A couple things make me feel that way, and I can show my screen real quick here. Number one, you have a support line on the Bitcoin chart. If you connect this low, we're still holding this area of support. So we're kind of dancing around this 20,000. And I think one of the key things that I'm noticing is sentiment is really, really bearish on Bitcoin. Yes. So again, with sentiment being so bearish, it makes me almost a little bit bullish. The fact that we've been going sideways and sentiment has remained this bearish. So you almost want to see a little bit of a pop to get that sentiment to be more bullish in the near term. So I think, again, if you combine a Fed pivot, or at least the chance of a Fed pivot, it's more of a risk on in situation. The dollars started to come off the all-time, well, not the all-time highs, but 20-year highs. And those are all recipes for a potential short squeeze in Bitcoin, at least to 22, 24, maybe 25,000. Midterm, I'm still in the camp that it's going to still see 12 to 13,000 at minimum. So I am midterm bearish, but I am short-term bullish here.
So certainly a swing trading opportunity potentially, but then lower lows coming for sure.
Yeah, absolutely. And I think as a swing trader, like if anyone's watching, and again, this is not advice for anyone to do, I'm just speaking from my own perspective. But basically, as long as you don't trade below this trend line, then you would be positive on Bitcoin, right? So this is a very obvious trend line across here, slightly angled up. Right now, that trend line is right around 18,500. So as long as we don't trade below that, I think then you keep a neutral to positive view on Bitcoin with potential upside. Again, any sort of upticks maybe through 21,000, you could get a little bit of a short squeeze there with sentiment being so bearish.
Now, do you see the same thing for Ethereum, or is it just Bitcoin at this point?
No, I think with Ethereum, same thing. Both charts have pulled back pretty substantially. I can bring up my Ethereum chart here. Basically, Ethereum's trading in a little bit of a wedge pattern, same kind of upsloping trend line, connecting the lows from June, then into July, and then obviously to September here. And basically, as long as you hold that line, I would think that you head up towards this 1560-75 range, and with the potential, same thing, to kind of have a short-lived squeeze outside, maybe as high as 1800 or so. So again, I think in the near term, sentiment is kind of pushing me more towards bullish. As long as we hold these key trend lines, I think eventually you'll see some buyers come in, especially if the dollar can continue to weaken. And like, if we get a jobs number on Friday, which is weaker than expected, that would be very bullish for Bitcoin. If we start to see the CPI numbers coming down with inflation, very, very bullish. And I do think we're getting close to that. I mean, the jobs numbers have stayed so strong, but they are another lagging indicator. So the idea is, 3 months ago, we started to see the stock market coming down, maybe even before that, but jobs numbers were still strong, but they should start to catch up to the economic pictures, especially, I mean, you're like me, you pay attention to the financial markets. Almost every other day, there's another big company saying, hey, we're going to lay off 10% of our workforce. At some point, those jobs are going to start hitting the economy and not being picked up.
Absolutely. Are there any stocks that you're currently paying attention to? I know Twitter was going crazy yesterday with Elon news, but anything you're looking at?
Yeah, for me, it's again keeping it short term. I think bear markets are very, very important to keep your mind in a short term perspective. So, like, I continue to like this GSK on any sort of pullbacks. GlaxoSmithKline, it's good dividend paying stock. It's kind of known as being a safer play, but it's really had a big dump here. It has had a recent bounce. So what you would look for is like a pullback to 29.50, somewhere in that vicinity, and buy that retrace into a gap fill in these support line trend lines. And then in regards to other stocks, I think the Chinese stocks are looking interesting to me. One of the things that catches my eye on the Chinese stocks, this is Alibaba's chart. So you can see this long-term trend line was broken to the upside because of the market conditions. It's been trading down, but it's technically has broken this long-term trend. So at some point, I think it perks up there. And one of the interesting things to remember about China is that it's not suffering from the same high inflation that the US and Europe is suffering from. They only have about a 2.5% inflation rate there, mainly because a lot of the goods that they consume are just haven't seen the inflation that the goods we've consumed have seen. So I think that the lower the inflation in China, it leaves the door open for the government there to stimulate more. Now, we know their housing market is a mess, but I keep on thinking back, well, what happened in 2008, 2009 when the housing market in the US was a mess? Well, the Fed came out and printed gangbusters, and then we had one of the biggest runs in stock market history. So is it possible that they, with a low inflation rate, could do the same type of thing? So for me, it's picking and choosing with a few stocks very carefully, but then also looking to foreign markets to see where money is underinvested, where money could move to. And certainly China and some of the foreign markets are very underinvested.
Mm, good. I haven't actually thought about any of the China stocks or anything like that. So that's good insight.
Yeah, and with the Chinese stocks, obviously, people, there are risks involved, right? Government crackdowns. Now the stocks have been discounted significantly due to that, but I would always recommend like best of breed. Don't go picking a tiny micro cap China play. You stick with like the Alibabas, the Baidus, or you could just do the K-Web, which is kind of an ETF that tracks a bunch of those plays, but stick with best of breed and obviously monitor share size. Don't go too heavy on anything in China.
Hmm. What about precious metals, gold and silver? Are you trading any of those?
Yeah. So number one, I was like feeling depressed about gold. I mean, the dollar kept on going up. It was my favorite pick of 2022 compared to Bitcoin in the stock market. And listen, I think gold at the lows was down 7% for the year versus 25 on the S&P and like a huge amount on Bitcoin. So it had been performing well, but not up to what I expected. But what I loved about gold is that as soon as the dollar pulled back over the last like week or so, gold just ripped. And again, one of the things I like to tell people is that you've had the dollar go up something like 18% this year from the start of the year to the highs, and gold only fell 7%. In a normal world where everything's equal, gold should have fallen 18%. So the fact that it only fell 7 tells me that it's likely that big money is accumulating. And I think when you saw the dollar pull back here, the mega jump in gold also signals that. So I continue to be really bullish on gold. I want to show this chart here because this is a big level to watch. But take a look at this long-term trend line. This is going back to the highs from 2022 March when we hit that 2070-ish area. And look at what we're testing here. So you haven't broken out on gold, but you're really close, and it is testing that level. And if you're able to trade through this, then I think you have a very big potential within 6 months to be retesting these highs. So I think I continue to be really bullish on gold. I mean, every angle I look at, it makes sense. It's a safer play in a bear market. The dollar at some point, I do think, starts to get weaker again. So all of those type of things makes me feel good about investing in gold.
Yeah, absolutely. So, when you mentioned the lows that may come in, further lows, I should say, and that could possibly happen early next year. Who knows, right? Do you feel that, it will be till mid of 2023 before we start going back upwards again?
Yeah, I would expect. So for me, at least with Bitcoin, I think you put in a bottom around mid-year of 2023, maybe in the second half. I think this bear market's going to be a longer bear market than what we're used to because all the previous bear markets, you always had Fed printing money, right? So it kind of probably accelerated us getting out of that bear market. Here we don't have that unless they started, obviously, again, which is hard to imagine, like we said, if inflation remains above 2%, which I think it will at least through 2023. But again, there will be a pivot point where Bitcoin gets to a level where people start to sniff out that if the economy gets so bad, the Fed will have to start lowering rates. And I think that's where you get that next big bull market to start. And so I think, again, mid 2023, late 2023 is probably the key for Bitcoin.
Gareth, always great and insightful information. Thank you for joining me today.
Oh, it's always a pleasure. Thanks for having me.